Hello, everyone. Thanks for joining us for a special edition of Founders and Funding. Since you can't see baseball or go any professional sports, we're doing a double header here tonight. For you that haven't met people who haven't met me before, I'm Alex Norman. I'm the co-founder of TechTO. I'm also an operator with 2 exits and the Canadian head of Canada for AngelList Ventures and an active angel investor in the local ecosystem. We host Founders and Funding every 2 weeks to help demystify the fundraising process for founders and explain the relationship between investors and founders. Today, I'm super excited to have a very special live stream. As I said, it's going to be 2 for 1. I'm going to provide a 360-degree perspective about angel investing and working with investors. The first part of today's event will focus on how to angel invest with Arjun from Tribe Capital, Eva Lau, and Farhan. After that, we'll have a fireside chat with Chris Newman and Kyle Campbell, who will explain how Kyle raised money and how he invested and worked with Chris, who is a founder of CTO.ai. Before we start, some rules of the show. If you haven't found it yet, there's a chat on the side of your screen. Go ahead and introduce yourself and let us know where you're joining us from tonight. Put questions in the Q&A tab on the right, and as we go, we'll weave them into the conversation, and it'll make sure that you get your voice heard. Finally, there's also an emoji like cannon that you can blast across the screen. It's like virtual applause. Please try it out now. If you're ready to get stuff started, please blast some hearts right now. Cool. After the main event, we will have the ability to network. We'll basically do what I call chat roulette, and we'll get into that after we get everything done. So if you want to stay around, meet some other people in the Canadian ecosystem, please feel free to do it, and it'll be a great way to have some random connections. And finally, if you're enjoying this or you have suggestions for future improvements, share on social media for using the hashtag TechTO. Finally, we couldn't do this without sponsors, and we have what used to be a Halifax company that was acquired recently sponsoring this Founders and Funding series. Could we get Anna from FastSpring up on stage?
Hi, how's it going?
Great, how are you?
Good. It is a cold and snowy day here in Halifax, but it is gorgeous. So SalesRight by FastSpring is here to make everything so much easier when you are selling SaaS online. So the interactive quote style of SalesRight is going to make communicating with your prospects so much easier and closing your deals so much faster. With FastSpring, our parent company, we just launched a cross-border merchant friction index, which pretty much just outlines how you can check out so much easier internationally. So I'm going to be posting all the links that you need to have in the chat, as well as my LinkedIn, so you can contact me whenever you'd like if you have any questions about SalesRight or FastSpring.
Yeah, so before we let you go, so who's your target customer? Who should be using SalesRight?
Anyone that is selling any sort of SaaS product is great for SalesRight. So if you want to get going and make selling easier, this is the product for you. It is an interactive quoting software that just makes the selling process just so much smoother.
And do you have customers across Canada or just Halifax?
Oh, it's across Canada and even in the States.
Awesome. Thanks so much for being a sponsor. We love having you guys up here. You know, used to seeing some pictures of what's going on outside. So next time I'll love to see the snow.
Yes, I will definitely send some. Right now, it is not a lot of snow. It's not a beautiful scenery where I'm currently living. So when I move to a nicer spot, which is next week, I will definitely send some photos.
We're looking forward to it. Thanks so much. Now, let's get to our first session. I feel like it's a month ago because COVID time means nothing. But I think it was late last week, Alex Danko, a local blogger, published a blog post claiming that the Canadian ecosystem doesn't work and doesn't know how to angel invest. I was lucky enough that Farhan reached out to me to say he wanted to show that this wasn't true and explain to aspiring Canadian angels how to angel invest. So he already had lined up Arjun and Eva to come tell the truth, share some knowledge. So we're going to start off with Arjun, who's going to come to stage and answer some questions. He's an experienced operator, a successful angel investor, and a VC. He's having worked at Social Capital and more recently launching Tribe Capital. When Arjun is not, while he's not Canadian, he's invested in some great Canadian companies, including Cover, Certain, and Joist. Arjun, please join the stage. Hi, Arjun. Thanks for joining us. Where are you today?
Thanks for having me. I'm sitting in Menlo Park in California.
Yeah, so I hope you have a coffee and you're ready to go. For people that don't know you, why don't you sort of explain your background and how you ended up in the Valley?
So I was born and raised in the Valley, so that was easy.
That was easy.
Uh,
But how
um,
did you, yeah.
so of course we're an immigrant family. So I actually have a ton of family in the Greater Toronto area. So the way it worked was they went from India to the UK to Canada, mostly in Ottawa and Toronto, down to Virginia, and then my dad was kind of the last youngest one. He came to California, so that's how I got here. In terms of the time that I spent in tech, I think I was probably just lucky. I was around the area. So the first kind of, I'd say, inflection point of understanding that something was happening in the Valley was, during this sort of, let's call it 99 to 2001 bubble. And companies were starting left and right. And so for me, I was a gamer, and I had a couple of friends and family that were in these startup companies, so I'd start visiting. Now, at this time, they didn't have any tags, any security, so I would just go and get access to a T1 line, set up my own server, and pretty much play games with my friends all day long. So I got in trouble a couple times, but that was kind of the impetus of how I started getting excited about what was happening. And fast forward a little bit. I don't want to go through the whole life story unless people have questions. But fast forward till today, majority of my time that I'd spent was freelancing in the beginning, started my own company on the Facebook platform when it started, and then from Facebook to mobile. And a lot of it was just building out product and data science teams while we were building consumer products. So leveraging that, building, I'd say, keen insights in order to make better decisions in the product side. And then over time, built out that type of expertise to invest. And obviously that took a long route. I'm sure you'll have more questions for that. But started angel investing, had my own seed fund, and then slowly invested into other parts of the capital stack.
So let's talk about the time when you were started off in tech and your career at the beginning, and you started building off the Facebook platform. What did you learn as an operator, and what were your successes and what were your setbacks?
In what way?
Well, I guess so. Or let me rephrase it. So we're talking about angel investing today. How did your time as an operator affect your ability to understand what a successful company looks like? How did being an operator set you up with a network to actually making angel investments?
Yeah, so I think probably the best way to explain it was that I never sought out to be an investor. That was first and foremost. And the company that I first scaled, I was actually acquired in. So it was a company called Rafa Play. We were acquired in and became Lowell Apps. And I became the CEO. So I went from product to leading the company. One of the things that I wanted to understand, given the network was just starting to build, was what's the right type of culture? What's the right type of execution? What is it that I don't know? And so my version of what you could call an MBA was to invest in other friends' startups or startups that were, where I may have wanted to work. And so my pitch to a lot of these folks was, hey, I have a growing company. I can help you with, the data infrastructure product and sort of thinking. In reality, it was the other way around, which is that I was learning from their culture, how they were building out their company, the speed at which they were growing, where they were making mistakes. So for me, I was using capital as a source to learn. And so I targeted the companies that I wanted to learn from. And that's how I started as an angel investor. So it had nothing to do, and I wouldn't recommend this for everybody, but my goal wasn't a economic outcome for my investments in the beginning. A lot of it was, what can I learn to operate at a better and faster pace? Probably faster being the wrong word, but at a momentum that made sense for the space that I was in. So social gaming, mobile gaming is, it's quite a red ocean of fighting at the time.
Yeah.
And I wanted to understand what it was that I was missing from other companies that were building, let's call it, long-term products that didn't have a half-life.
So I'd like to double click in this whole situation so I better understand it, because I think there's a lot of operators on the live stream today. So you didn't start off as CEO or as a founder, but you were put in CEO. How large was the company at that point?
I think we were maybe like 50 to 60 people.
Okay, and I guess it was built off the Facebook platform. It was gaming on the Facebook platform, or
Open social, Facebook,
okay.
mobile gaming by the time.
And so what I hear here is, hey, the reason you started angel investing was to basically understand your peers that were ahead of you in certain places and learn from them.
I think the best way is MBA and operating a company. What's the fastest way to do it? If people use that proverbial line of building the airplane while it's flying, it's kind of the same way here. Is that, hey, it's working. We have product market fit. We're scaling. But how do I do a better job leading? How do I do a better job being a CEO? How do I do a better job being a product lead? Culture, et cetera. Basically all foundations of a company. I was trying to figure out what are things that I could learn from and continue to improve. The hard part here is most people, I think, will look for coaches or experienced advisors. My issue was that the folks that I was meeting with, a vast majority of them had done a lot of these things in the past. And while that's valuable, it was really hard getting a lot of these people up to speed on how fast products are being built, how fast you're collecting the data, you're making decisions now on a day-to-day basis. I mean, it's a different world from now. It feels more natural because it's 10 years post.
Yeah.
But at that time, you were talking to entrepreneurs that had built stuff in the 90s and the early 2000s, and and building a cloud infrastructure, being the first customer on Amazon, or sorry, ninth, I think we were. Like, that's just a different world, and so I wanted to learn from the folks that were doing it in real time and what they were doing and improving.
So I love that, because I think what I've seen in the Valley, that's very natural. You're investing in your peers, and you learn from your investments as a way. Not necessarily that's the only reason, but I think it's much more common. So a couple questions around this. First, I'll take a question from the audience. I think it's Gonjian has asked, what is a reasonable amount of risk, Arjun, you were willing to take while learning from capital? What are the direct costs of making mistakes? How did you balance that? So I guess the two, I break down to how much of your personal capital do you invest, and also what risk did you make by actually learning this way?
Yeah. So I invested all my capital. And I remember at this time, an angel investment check could be $5,000. Like a $25,000 check was a big check for me at that time, given that that's all the money I had in my bank account. And in some cases, I was willing to even go into debt investing in these companies. So again, this is not an investment recommendation of what you should do, but just to take a step back. First phase was, let me angel invest into companies where I want to learn from. What you start seeking out because of that is, where are companies you would want to work at? Where are companies that you think you could add value, or vice versa? And so I think you generally start tuning into what are good companies and who you should be working with. There was no framework for revenue, scale, growth. A lot of it was, do I like the idea? Do I like the product? So it's product, team, market, and distribution. Distribution is something I added later, but those were sort of the four frameworks that I had used into making any angel investment. And again, the world was different then, because the amount of companies, the n number of companies that you saw were just smaller. So I think the biggest mistake I made is not investing in every single company that I had met from 2007 to 2011. I mean, those are all great vintages, and every company that we know of as being worth 10 to 30 to 80 billion dollars, where I saw all of them. And so I think timing matters, the people that you meet matter, the network matters. Those inflection points are really important.
Okay, I want to break down some of this a bit more, because there's a lot of wisdom you just shared. So first, before I break that down, how did you manage? What was your mindset as an operator and an angel? Like, is this like 5% of my time, 10% of my time I'm going to spend looking for angel investments and talking to those companies? Or was it, hey, this is beneficial, so I can just, whenever the founders are available, I'll speak to them?
I don't think it was an allocation of time. Look, at the time, I'm going to go back to timing.
Yeah.
We had the financial crisis. And so either you were going to go work at some, today's big tech companies, if you could get the job. But it was hard to get a job at, I know this sounds funny, but it was really hard to get a job at Yahoo. It was really hard to get a job at Google, et cetera. Facebook was just starting to scale. So and there's a lot of, I'd say, the tourists had left for that trial, and you had folks that were wanting to figure out a way to work together. And so the way I would sort of, I was younger back then, so obviously I had more time, but you'd wake up, you'd be building, and in the lunchtime and evening, you would just be spending all of your time with entrepreneurs or with folks at your company. It's a very, very little world at that time. So, Kevin from Instagram was like across the street. We all shared the same offices. So did Drew from Dropbox. So there's a little bit of an ecosystem. If I was to kind of name all the names, it's not to name drop, but we're all building these products and companies together, right? So you're kind of learning from each other, and you are supporting each other in some cases emotionally, but in some cases also financially. So I think that was kind of a special time where you were all growing together, and so you were learning at the same time. In terms of time, just to go back to your question, I think we didn't do anything but build startups. Like that was all we did. And there are pros and cons to that in terms of of how some people consider work-life balance. But my personal philosophy is that if you like what you're doing, it's a work-life harmony. A lot of people have sort of spoken in that direction, which is it doesn't feel as tiring if it's something that you care about.
Yeah. And that resonates. Like I think the team at TechTO puts a lot of time into producing these and helping the ecosystem. And it's a lot of work, but doesn't feel like a lot of work. Just one note, I've seen tons of questions coming in. We'll get to them in a few minutes, because what I'm going to do is I want to get Arjun to tell us a bit of his story, go a bit deeper in his experience, again, outsider perspective. Then I'll pull up Ava and Farhan, and we'll get to more of the general questions. So just, I love the interactions, but want to make sure we get through a bit of the story. So maybe just tell me a bit more about that. You had you have a framework now of how you look at investments. I guess at this point, you probably didn't have it originally. You had 3 of the 4. And can you go into a bit more depth of what each of those different, that framework, what does each of those mean? So distribution, the last one is distribution, but let's go into each of them and explain how your mindset.
Yeah, so there is 2 ways. Like if you look at the world on what I'd say pre-product, right? You're building something to figure out if it works. Are the customers going to engage, or are there going to be integrations, et cetera, et cetera? And then there's post-product. Everyone talks about product market fit, but you're really, neither. You're either almost there in building, or you finally got there and now you're thinking about scale. And so forget venture and angel investment for a second. We're just trying to figure out what works. So if you're a coffee shop, in the local area, you have product market fit. People come in, you are engaging and retaining the same customers, but you might not be expanding. That is a business model. It's lifestyle. It works, and that's not necessarily good or bad. Just like it's important to kind of recognize what that means. In our world, angel investors and venture capital, you're looking for high velocity growth. You are looking for ways in which something can be, I'd call it extreme in some cases, and I'll get to that in a second. So we had, I developed and my team developed more frameworks over time where, how do you underwrite risk across all stages? So at the earliest stage, when it's just a product, or barely a product, and it's a team with an idea in a certain market, how do you underwrite that, right? So we had these kind of 4 frameworks: product, market, team, and distribution, and just to try to understand within those levers where the team was. Now, fast forward 10 years, going from angel investing to seed to continuing to operate. One of the things that my partners and I learned was all this work that we had done building our companies, leveraging data, ingesting it, analyzing it, continuing to store it, retrieve it. Why couldn't we build these frameworks every time we met a company once the company got to a certain inflection point? And could we quantify where they are in their life cycle of product market fit? That's the main thing that we had started to learn. And so what you can do is across product, market, team, and distribution, you can understand where in the company's life cycle can you quantify and measure those pieces. So product is quantifiable, you can ingest raw data. Distribution is quantifiable, you can ingest raw data. Team, not so quantifiable, but you can see what they've done over the last couple of years as a basis to start. And then mark it up depending on how much data you have. You can build a bottoms-up view or take a top-down depending on what type of company it is. That's how we kind of structured our firm, our thinking, our infrastructure as we built it.
Cool. And I guess I'm going to ask you one more question. I'm going to pull up Eva and Farhan because lots of questions apply to all of you. So what I'm hearing is like I know Tribe, you're very metric driven, right? And what's your normal? I guess two questions. What's your normal entry point into investments at Tribe?
So we're sector, stage, and region agnostic. So we'll write a check, like an angel style check, 25K. I don't want to lose that sort of influence of how we think, and we'll go all the way up to 75 million. But I think our initial entry point of where we like to enter is roughly around 5 to 10 million. It's called seed through Series B.
Okay, that'd be big. 5 to 10 million would be a big seed in Canada. So last question before I bring Eva and Farhan up, and then because I think I just don't want to repeat the questions too many times. What's the big difference when you and I imagine you work with angels and you co-invest with angels? What's the difference in mindset from what makes a good angel versus a good VC, and what's the difference between the two of them?
Yeah, that's a long one, so I'm sure that'll extend into some other folks. Look, I think the biggest mistake any investor makes, regardless of VC or angel, is trying to run the company as if they ran it. Like that's the big. I did that, so I know that mistake, and I saw it happen a couple times. That's number one, like the big no-no. And I've seen a lot of new angels do that because they are operators at companies today, and they say, hey, why don't you just do what I do, the way in which I do it at my company, and it works. You should do it at your company too. Most of the time that actually doesn't work because there's certain nuances to the way in which the product is being built. So you have to try to figure out how do you do what they do better as a company, and then what do you do as a value add, regardless of angel or VC stage and the experience that you have.
Yeah, and then how do you at Tribe now work with angels? Like, do you view them as co-conspirators, competitors? Do you prefer working with some others?
Yeah, so we have a pretty large network of investors that we work with. Some are angel and some are just later stage as well. Yeah. So I think it's roughly around 1,200 people today. It's a program that we call First Look. We do that on purpose because at any life cycle of a company, no matter where they are, no matter where they're located in the world, how fast they're growing, there's certain expertises of people all over the world. That's our perspective and view that could be helpful to the company's growth. And we were a part of these types of ecosystems as we were growing up in our companies. We helped build small ones, but I think our goal was like, now how do we make more of a global community for a global community of startups? And so co-conspirator is probably the wrong words, but more about what are the segmentations and the audiences of investors that are out there that can add value to a company at a certain stage. And then we try to put them together. And our view is the only way to really do that is for our investors to get us the same context that we have into the companies that we're investing in. And that's why we've always taken a data science approach towards underwriting the companies.
Great. Thanks so much. I'm now going to pull up Farhan and Eva. I'll ask them to do quick intros, but while we wait for them to come to stage, Eva's had a pretty big week. Her husband has started the company called Wattpad, which you may have heard of, and Eva was early on there, and she was an early angel investor. Now she has a VC fund. Farhan is like also one of the OGs in the Toronto tech ecosystem. I think he's probably worked with or invested or talked to everyone in this ecosystem. Starting with Extreme Labs, he was at Helpful, he's at Shopify. Eva and Farhan, do you want to give a quick 10 seconds of what I didn't, in case someone here doesn't know who you are?
Well, of course I can. I'm founding member, I'm a founding partner and general partner of Two Small Fish Ventures. Actually, I've been in the ecosystem for a long, long time. My angel checks came from the .com days. More to share, for sure.
Cool. Hey, everyone. Farhan. I'm actually an investor in both Tribe and Two Small Fish. So there you go. Nice little connection there. And happy to be on this panel and share with folks how they can go about reducing the friction to getting angel investment. So that's what it's all about. Okay. So maybe, I usually have tons of questions prepared, but I can't see I see 20 questions being shared. So maybe I'll just go to questions, let you guys pick it out, whoever wants to answer. First thing coming in, though, is lots of congrats, Eva, in the chat. So we'll start with, and it's going to be redeployed, which is even making people more excited. First question is from Gunjan. How do you find your niche as a VC firm? Lots of them operate based on industry, etc. So I guess it's for Arjun and Eva. So yeah, what's your niche? How do you find it?
Well, I think, right now, in terms of finding the right investors, I think is absolutely key. It's network, right? And I think something that, a lot of entrepreneurs actually don't know the trick, and I'm going to share it publicly now. You actually should be practicing your pitch with as many investors as you can. So don't be choosy and say, I don't want to talk to Alex. I only want to talk to Farhan. Like, I mean, use Alex to practice, right? So that's what's important. So I think, at the end of the day, the more investors that you speak to, angel, VC, whatever, you will actually have a good feel at the end of the conversation if this guy is someone that you want to run a journey with. I always look at taking investment from an investor. It's kind of getting into a kind of a marriage contract, meaning that I'm going to build this company for the next 5, 7, 10, and in Wattpad case, 15 freaking years. My husband told me that, we're going to be like very rich in 1 year. I'm like, really? But you know what I mean? It's a long time. It's a long journey. And you want people on your cap table that is someone that you have a good relationship and trusting relationship with. Obviously, if they have domain expertise, operating experience that actually can help your company, that's awesome. But at the end of the day, while they check all those check boxes, how a fit it is as a person, it's also very, very key.
So Eva, quick follow-up here. You're known for network effects, and I know you love investing in network effects. So should someone that doesn't have a network effect business, like let's say direct-to-consumer business, should they be knocking on your door? Should they be pitching you?
Well, then that's something that you have to kind of do it twofold. First of all, I don't mind people to pitch me, if things are kind of adjacent to my market. But if people come to me, telling me that, they're doing something totally out of my zone and paying me, I think it's a waste of both people's, time. So I think certainly you need to be selective in terms of, you don't want to kind of go out and say, oh, don't, I'll talk to anyone, and anyone gives me money, I'm going to take it, because you're going to hurt your reputation. Because you're basically meaning that I don't care about smart money. I just care people who talk to me. But what I'm trying to say is, when I say you need to build your network, is you use that as an opportunity to practice your pitch. But at the same time, is to build your network, build your reputation. So one day someone will stick the neck out and say, hey, you know what, Eva, I just heard of this guy, John, or this woman, Susan, just pitched to me, and it's an awesome company. I think you will like it. Do you want to take a look? Someone is sticking a neck out for you, and you need to that type of people.
Cool. Arjun, I'm going to flip it to you. Your specialty seems to be data-driven insights, right? So, how do you decide to be data-driven? And then as a founder, when is the right time to pitch you or to reach out to Tribe?
Yeah, I want to hit on something Eva said for a second.
Okay, go for it.
And I'll jump into that. I'm going to take the founder perspective from here. When you are a founder and you're building your company, you have no fucking idea who's good for you, and you don't have a network. And so part of why I think the angel ecosystem, the people around the table, they need to kind of service the customers that they have and the founders, is whenever I've heard someone say that, hey, this is my perspective and I don't like to meet these types of companies, they've missed out on 10 of the largest companies in the world. That was one of my mistakes when I was younger. And so I've always taken this approach of, I'm willing to meet anybody from anywhere at any given time frame, no matter who they are, where they're from, right? There's this world of who you know versus what you know. And I'm more interested in what you know. And that's actually how we built the firm over time. Now, depending on where you are as a life cycle of a company, that's the important part, which is what risk are you taking? So we write smaller checks, right? Let's call it 25K to 250K at the early stage, pre-seed and seed, because there's no product yet, right? So I'm betting on someone's perspective, on their market. We may be wrong, but we'll talk to anyone and we'll review everything. And then we respond with, hey, we don't think this is right for us for these reasons. But then as the company gets to a later and later stage, regardless of network, then there's something that we can take a look at. We can quantify network effect, we can quantify product, we can quantify distribution. In some cases, you can quantify the team, and not the team as if here's where they worked, but here's how they've worked together. And Farhan probably knows this more than a lot of folks, but we've been doing this for so long where a lot of our investments, if you take a look at it, ends up being very focused on what they knew versus who they were, where they grew up, what they looked like. And I think that's how we've tried to focus our time and attention, because there's just a lot of funds that will say we do this, or we do marketplaces, or we do fintech, but they won't invest in those companies because they're looking for a very specific way in which to think about it. And we're never going to be perfect either, but I think our whole goal was, how can we invest across the stack from the smallest seedling of a company all the way to a company, even if they're in the public markets?
Yeah, and I'll jump in here because I actually think angel investors are VCs of one, right? You are basically the same thing as a venture capital firm. You're trying to figure out what value you can bring to the ecosystem, and it could be for various reasons. I mean, I think both Arjun and Eva said this. It's about learning, right? So if you're an angel investor, it's probably not the right asset class to like say, hey, I'm going to actually put all my money here to like make money. I don't think that's the right goal. But learning, this is something I learned from Daniel, is learning is the goal. And so if that means that you want to be around smart people, if that means you email, actually this happens to me often, if there's a product I like, I will message the founders and say, hey, are you interested in either working together on advising or in taking investment, because I want to learn more about how you think about this segment. I think that's actually super useful as a way to get into the network. I really do like the idea also of like not worrying about where people worked or who they were, but talking to lots of people. Actually, I remember this from the Helpful days. The first pitch meeting we did for Helpful, we were just learning about the product, to the last one was literally the product changed the whole throughout the day. But the first pitch meeting was horrible, to the last pitch meeting, meaning like Bessemer flew out to Toronto to give us a check. Like that was the difference in just one day, because we learned every time we got feedback from what we thought our product idea was. So I think everything we're talking about is useful if you're thinking about being an angel investor. And if you're thinking about getting angel investments, is learn from every meeting you can.
Cool. I love that. What I hear is a lot of hard work, a lot of serendipity, and being open to stuff. People, we're going to get through the questions now. Keep on putting your questions in there, and I'll get to them. Next one from Richard, and I'll give it to you first, Farhan. And I guess this is why lots of people hear is, what advice would you have for people who are interested in getting started in angel investing for the first time? So you have some money, you have this idea that you want to angel invest. What do you do?
Yeah. So number one for me, and I talk to lots of folks about this because everyone's interested in it, it looks like the sexy thing to do, is start with a portfolio approach.
Yes.
Meaning, if you are going to do this, please, number one, figure out the amount of money you can lose, because it could go all to zero, but also take the number and divide it by 10 or 20 and say, okay, I'm going to invest, let's say you start off, I'm going to invest 50K. Cool. What 10 deals am I doing at 5K each? Because it's all about portfolio. You have no clue whether it's which investment is going to do well. Otherwise, you would ignore the rest. So I would always start people with, and I've seen this go badly many times. A lot of my friends would start and do like, I did 125K investment. I'm like, cool. You doing like 10 of those? They're like, no, I just have one bet. I'm like, what are you doing? That's not the right thing. So that's number one. And then number two for me is figure out why you're doing it in the first place. I mentioned that I do it for learning. And so when you have a portfolio and learning, right, you think about it as, these are all the smart people I want to be around. I want to learn something from them. Actually, like, Arjun talked about it. Like, he messaged me. He's like, hey, it'd be great to have you as part of the tribe community. I'm like, awesome. Eva as well. Like, I wanted to learn from both of them. It's why I wrote the check. And so I think for me, the easiest way is figure out what's your number, divide it, and then get in front of some of these people. And it could be easily like messaging Eva or Arjun or smart people. But if you use products, go on Twitter and talk to the founders, give them feedback, right? This happens pretty easily now. You can actually see a product, give feedback to the founder and be like, hey, also, by the way, I'm an angel investor. I think there's a lot of ways to get in front of people with what you know versus who you know.
Eva, Arjun, anything to add?
I agree with that, because I remembered when I first wrote my angel check back in the .com days, I certainly didn't take the approach, and I kind of like, oh, I seem to like this company, and at the time I was actually working at BrightSpark, the only tech accelerator here in Canada, and I just kind of like put money into those into some of the companies that I was working with. So I think one thing that I think for people who wants to angel invest, the biggest hurdle that they have is actually not about how much money they worry about losing, how much how to divide the portfolio. I think a lot of the people who have problem angel investing is access. Actually, I remember the early days of Wattpad. Believe it or not, I'm going to tell you this. One of the some of the users on Wattpad actually messaged me, Eva, I love Wattpad so much. Can I invest in your company? I'm like, we don't take angel checks like that. But you know what? That's what I mean. It's access. But if you have the heart to actually go and invest in companies, why not? Why not pick companies that are small and early enough and to say, can I invest in you? But I think most importantly, if you are serious about trying to become an angel investor, to understand the ecosystem, go TechTO, go talk to, all these kind of events. They showcase all these early stage founders all the time. And you even, just within the chat that you're writing, right, you're engaging in right now, you probably are bumping into early stage founders already. Find out what these people are doing. Maybe you'll be interested to be, what, this is a great idea. I only have $10,000. Can I invest? That's just a start. So I think, for me, angel investing, the hardest part is two things. First of all, you are not a part owner. So don't ever say that I'm a part owner of this company, because you are not. You're just an investor trying to run the journey. But access by building your own network, it's no different than fundraising. Angel investors have to pitch themselves too.
Yeah.
I remember early days, when I, left Wattpad and became an angel investor. I was very early, and then, at the time, Wattpad was, not necessarily at the stage it is right now. I have to fight. People say, I have allocation for $100,000. Why should I take your check, Eva? I'm like, okay, let me do my little, dog and pony show and tell you why you should, take my money. So access, build your network, build your own reputation in the ecosystem is very important.
I like the portfolio approach too. Question from Nick. Question from Chitra. Can you talk about some of the common mistakes that you made as a first-time investor, or you see first-time investors make? Arjun, I think you see people in the Valley, you see people in Canada. What's the biggest mistakes? I other than just investing everything in one company.
Yeah. I don't think there's a right or wrong way to do any of this stuff. Like when you use the word angel investor, people automatically think I have to invest at the pre-seed or seed stage. That's the only place I can do it. And what I've learned from a lot of folks is, if you like a company and if you think you can do something, just figure out a way to get in front of them and invest in their next round, or invest in a note right now. Like I've seen, it just kind of opens up your mind to just think outside the box, which is, I want to invest. There's no such thing as I have to invest early. If there's more companies being built, they're scaling at a faster pace. You're seeing software eating the world again, all over the world, and we're seeing that, including in Toronto. And if a company is at 30 posts, 50 posts, 100 posts, a billion posts, who cares? And I think the other piece here too is there's no reason why you can't concentrate your time. I think a lot of these things we just say, hey, do a portfolio approach. Well, I don't, and I know a bunch of other people don't either. And my book is probably concentrated within 7 companies, and that's always going to be the case. No one ever got better or rich, right? Like those things both kind of coincide with each other, by investing in their 7th or 10th best idea. Is usually the 3rd or 4th. And if you're lucky, obviously the first one. And so I think there's a shift depending on how you spend your time and where you think you can be the most value add. Now the counter to that is, I spend my time on the wrong thing. Well, you could also look at that and say, here's all of this time that I invested in getting smarter, and where can I apply that next? So I think there's different ways to think through this. Like my angel portfolio got to the hundreds, but starting in 2005. Right? It's not, and I meet people that invest in 100 companies a year, and my mind explodes. So I don't know how they're going to help and how they are a value add beyond just the check.
Yeah, and I like that approach. I mean, when I talk about diversification, I think I mean many bets. I love that you concentrate on a certain segment. Like for me, when things that are mobile come up, I'm almost always trying to get into those deals because I have a background in mobile and I spend time in that area. But I try to make many bets because who knows which one's going to work. The only mistake I would think that people could make is trying to think of angel investing as an asset class like any other. Meaning, if you're going to an angel deal, you can't ask the founder for due diligence items that they don't have, right? Show me a graph that goes up and to the right, and show me how you're going to get this customer and who's you're going to hire. That doesn't make any sense. And I think this is where potentially some people are being calling out Canadians for trying to do due diligence that doesn't exist and doesn't make sense, right? So I think this is something that we can learn from the Valley, where if there's an alignment between the investor and the founder, and there's some expertise, some value exchange happening. Hey, I know some mobile stuff. I'd love to invest in your deal to learn from you what you're going to learn in this. Maybe you're doing mobile for education. cool, I think we can help each other. There is a fit there. But I'm not going to ask really dumb questions like, show me your slide deck that shows all these things. And like that doesn't make any sense. So I think that's where we have to kind of be a little bit less Canadian, more risk taking in this example, because this is an asset class that is risky. Understand that, right? Don't think you can do it using fundamentals. They're not publicly traded companies.
Farhan, let's double click on that for a second. So, makes sense. You can't do due diligence based upon stuff that don't exist. It's basically a team who has an insight usually.
Yep.
So what do you do due diligence on? And can you realistically expect a knowledge exchange if you're writing $1,000 check into like around with 25 investors? And so I'd love to hear what do you all the three of you think about what should you be doing to put that filter on?
Yeah.
And then what can you really expect? And if you're doing 7 investments and you have the time to exchange that knowledge, but how else can you get the knowledge exchange if you're a smaller check in a popular company?
Yeah, I mean, expectation setting is the first thing. So when you're writing the check, you should say, hey, actually, I can probably spend 30 to 60 minutes a month talking to you about this. And that actually can set expectations around how much time you might need. Of course, when a company's going through something, they might need you for 2 or 3 hours. That's fine. But I think on average, you can kind of set that expectation. For me, the filter is it something that I can learn about and I have some sort of value exchange? Again, mobile tends to be one that people always come to me about, and one where I could probably add value. And so we think there's an exchange of value there. I think the other thing to think about is like your filter can be like, you can write down and have a model, right? That's what I do. I just have a thing like, here's where I invest in. I actually love to invest in things pretty quickly also, because once I think it lines up, I don't ask any more questions, right? Like something came to me this week on Twitter. They DM'd me. I looked at the thing and I said, I'm in. And then the founder said, do you want to set up time? And do you want? I'm like, first rule of sales: stop talking when someone says yes, right? Like I already said yes. Like I already understood the thing. I was like, I'm not trying to diminish the founder. I was just like, I know what you're trying to do. I think it's a great idea. I think we can add value to each other. Let's do it. I mean, after a few back and forth, they're like, cool, you're in. But I think that you don't have to, as a founder, also being Canadian, we try to like say, oh, well, let's talk on the phone, and I don't think that has to happen every time.
And then, so let's let another question that follows up on this from Daniel. Markets, founders, product. Which order of importance when you're talking to someone? Arjun?
Yeah,
I have to choose one.
Market. Tailwinds of the market.
Eva?
Product.
Farhan?
I would say market.
Interesting. So no one's picking founders over market?
I think
super tough, right? Go ahead.
Yeah.
I think the thing is that people try to ascribe their pattern match of what it means to be the right founder. And sometimes the right founders might be sitting right in front of you and you might not be able to recognize that. And again, it happened to me. It's probably happened to Farhan as well, which is, the VC will say, I don't think you're the right founder for this type of product. But if your product is working, who can tell you that? Right? And so I think a lot of we try to go back to is, what is working, what is not, and can we take a look at that? The reason I don't think product matters, to be honest, is because you have a ton of companies where their products are atrocious, but the market is extremely positive towards that type of product, and it just still works, and you can't unseat them, right? So there's a lot of pieces to the puzzle where you want to make sure from, again, product, team, market, and distribution. If you have the right market and the right distribution strategy, your product can be pretty mediocre and it'll work very well.
I feel like you're talking about LinkedIn or Workday.
There's probably a list of 100 companies, and there's probably some in my portfolio. I just won't name them out loud.
Question from Christopher: what kind of alarm bells ring for you when someone is pitching a platform that is a first? So I guess it's what alarm bells when someone has
I would love to jump in on that one, because I just recently heard a pitch from a founder. It was a pre-product, okay? Like they don't have a launch, but they basically get every single buzzwords in the pitch, from AI to blockchain to marketplace to eventually going into quantum, and then throw a little bit of a crypto and security in it. And at the end of the day, it's a mumbo jumbo of keywords. I caution founders when they are pitching, their ideas. Yes, you may actually be using a lot of these technologies, but at the same time, I question, the validity of some of those bells and whistles is actually needed during a very, very early stage of your product. And if they don't play a key role right now, don't tell that you're going to eventually 5 years later do a stable coin. If crypto is not even in your architecture right now. right? So those what I meant is like sometimes those keywords are important when you pitch, but sometimes when you're pitching to professional investors, they're gonna be like, this guy's just kind of like trying to kind of like push a valuation up by just throwing all these keywords. He knows nothing. It actually discredits you.
Yeah, I'm gonna counter that again.
Arjun, we're gonna have a talk afterwards.
Yeah, I think the thing is, look, if someone's coming to you transactionally with all the buzzwords, I get it. There's a certain amount of filter that you'll have with alarm bells, but there's if you can spend time to get the nuances of what they're really trying to build. So, for example, I'll actually just jump right into Cardiff. So, if you talk to Henry, he said, I wanted to build a secondary exchange for trading companies, and I want to build a platform to do that. Like, that was his original seed pitch. Now, if you take a look at that and you say, that is the dumbest idea I've ever heard in my life, and why would you ever want to build it, and how are you going to do it? And he said, here's the stages I want to do. He's been building that for the last 7 years, and he's always been on spot to get there. And so a lot of investors kind of crunched because they didn't want to spend the time understanding the nuances of how the private markets worked, how shares go, what's a transfer agent. It's like complicated stuff. And so I think there are certain businesses where it's complicated and you're coming into it for the first time. And on the first pitch, you could be like, I don't really like my alarm bells are going off because of the words. But maybe part of it, like, I don't actually take pitches. I never look at a deck. The first thing that I really care about is, let's just go for a walk and just tell me how you think about the world. What is it that you're building? And then as I get into it, assuming I'm getting into it, then I'll start asking for the pieces of the data that really matter towards the story that you told me. And can I build bottoms up narrative? Now I invest later stages, of course, like a Series A, obviously in Silicon Valley is like a Series B in Toronto or Series B in Asia. But there's a bunch of the companies we had mentioned, like Certain, that's based in Canada, that we invested in. That was a seed check. I just asked them a couple of questions on a walk. Hey, what is it that you're trying to build? Because there's lots of companies doing the exact same thing. How do you get there, and what are the pieces of the puzzle that you think might be missing? The bottoms up view then can tell me, like, do I think you have a chance at getting a shot there? But a lot of the pitches that he had mentioned, the investors that he was talking to, all they really cared about was one thing: ARR, and what are you going to do in the next year? And I think that's like a wrong way to invest.
I agree with you wholeheartedly. If they're, if any companies, the only KPI is about ARR and, MRR and all those kind of things. There are many ways to just tweak that to achieve that goal without actually getting into the essence of what this company actually is transforming. So I agree with you wholeheartely.
Yeah, I think what we're seeing here is that all of us have a different approach and different framework, and using, like, I like to do these async, Arjun likes to go for a walk, right? Like, I think that that just shows you that there's different ways people can add value and different matches for founders and funders.
So I'm going to interrupt. We have like 50 more questions, and we're running a bit late. So what I'm going to suggest is 2 quick questions, and I'm going to send the rest of the questions the 3 of you can answer, and maybe Farhan and Arjun and Ivo can also have follow-up episodes, because I think the appetite's huge. So, and I do think, and I'd like to get, maybe get a profile of the different aspects. So first question, and quick like 30-second answers from each of you. Difference between US and Canadian angels. I know this could be 10 hours, but or at least 1,000 words from Danko.
Yes. Let me just get on that one. I really want to get this out of the way. I think, when people keep saying that, the Canadian system is not working, I think they're comparing a teenager versus a grown man. This is totally not, apples to apples grow. So yeah, if you go into the angels in the valley, you go into a coffee shop, you meet early employees of Facebook, early employees of Google. Where do you find these people in Toronto, in Canada? You don't, right? So yes, we do actually have angels that are, angel groups that are just, high net worth people, have built their own traditional businesses. They have money to put into the ecosystem and they want to kind of support innovation. Those are great money. They are not necessarily, the people who know how to operate the company for you, but they are great supporter. We welcome them. And there's no differentiation of like, don't take money from those people. Obviously, they don't necessarily provide added value like myself or Farhan, or anybody in this panel who have been operating, tech companies. But I think that's a difference, but we are growing out of it. Wattpad just, if, after closing of the fund, we will have a new generation of angels in the ecosystem. Right, so that's what we need. This teenager that we have in Canada will be a grown man, in the next few years. Just wait for it.
I like that answer. I like that answer.
Arjun, anything to add?
Yeah, I was just going to say, I like that answer. The only thing I would add is there's a lot of angel activity going on. We just don't talk about it because we're Canadian. And I want to change that because there are so many people, like there are people, I mean, somebody called out like Shopify. And I'm like, I know people who do a deal a quarter for the last like 10 years at Shopify. So like, we just don't talk about it. So I think we have to just do a better job of like promoting ourselves, be more American in that respect.
That's right.
Arjun, American perspective here?
Yeah, I think, all ecosystems, it's really important to understand the ecosystem. Like even here within the Valley, we obviously have Los Angeles, Seattle, San Francisco, Sunnyvale. Like there's different types of ecosystems. I think it's because we have multiple types of companies that have been built over the years. So if you kind of take a look at Canada, so we're talking about Toronto, Waterloo, obviously Vancouver, different ecosystems within the city. But like the types of companies that are being built, I think there's a place, and my belief is that it's going to happen in Canada, is a certain threshold or inflection of multiple companies are getting larger and larger. What that allows you to do is for people to kind of recycle it back into the ecosystem and believe that there's going to be more companies built that way. India's starting to hit that as well. I think it's probably similar. And within India, you have its own ecosystems. You see Western, Eastern Europe starting to happen. So I think it's a matter of enough people, enough education, enough capital, and enough large-scale companies that are working that make the big difference. And I think you've already seen that happen in Canada. And so it's more about like fast forward 5 to 10 years, does it look similar to different parts of the Valley?
I've got one more question, but I'm going to slip one commentary before. I think, Farhan, you hit a nail on the head. Like just with my role at AngelList, I could probably name 200 to 300 operating angels that are writing consistent checks. But being Canadian, they don't want the publicity. They want to keep it private, and they rather they look at it as paying it forward with their ecosystem. Exactly. And then I'll get to that a bit after. So last question, and then we'll follow up with more questions so we can share more knowledge because this has been super impactful and helpful. Anti-portfolio, one company you wish you had invested in that you had a chance to.
Oh my God, Arjun probably has tons.
Too many.
So just give me one, Arjun. We'll start with you. You have so many, you can just pull one up.
Yeah, I mean, Instagram, Twitter, Uber. Sometimes I got into these companies later, but just like I saw all the pitches.
I'm gonna cry when I hear that. Okay, Farhan.
Yeah, I have one. So I mean, I like Arjun's answer, which is like, don't wait. You don't have to wait till you don't have to go early. You can go late. Actually, I had an opportunity to invest in Uber at like 5 billion, which was like, oh, it's too much. Like, I obviously should have done it because it was still like a 10 bagger. So Uber.
Eva.
Well, I mean, it's a well-known fact that I wanted to invest it in Bistrip, and they didn't let me put the money in because the round was closed and our check was too small. But you know what? I still got money out from it because we were the advisor. So I'm happy.
So sweat equity instead of cash. So
that's it.
Awesome. This has been great. Thank you so much for your time. We'll follow up, and maybe we'll have each of you back in a future episode. Our future live stream. Thanks so much. And I hope we've given a bunch of angels their wings today. Going to get to the second session, which is more typical founder and funding. The goal of founder and funding is actually to share the story of the relationship between an investor and the founder. And we're going to get to Chris and Kyle in a minute, but I have a couple announcements of things we're going to do to keep on pushing this conversation forward. First, we have a series called Perfecting the Pitch. We have traditionally done that where Perfecting the Pitch has been something where insiders come to, one of them pitches their deck, and they get feedback from the community on how they can improve their story and narrative. Going forward, the next series, which starts in February, is going to have local Canadian angels that are willing to write checks so they can get a wider perspective and get more angels involved. And second of all, we're working with a couple different people to build a list of angel investors that we can share with the community. So we're going to keep on doing that. And last thing, if you want to help change this community and move this company forward, we have a couple of job postings to help the TechTO team, which the team will put in the chat right now.